Hey, it's Clay, and this will be a video chart on ticker symbol OVID. We will take a look at the daily time frame. Well, this one had a rough day today, so I don't mean to state the obvious or rub salt in the wound or anything like that, but big volume and then had the gap down and got what we would call a doji candle. So the doji candle and then its location is what makes this a pretty interesting setup going into next week. And this will mean a little bit more to those of you that have traded for a while. But if you have traded for a while, I'm sure you've seen stocks get beat down. And then all of a sudden the beat down stops right around an area of support, an area that, has some technical significance. And then not every time, but there can be some quality bounces. And that's what we have here. We have, a big beat down, obviously, but then the price is now sitting not exactly at, but definitely well within the range of a couple of very famous levels within the world of charts. That purple line being the 50-day simple moving average, and that pink line being the 200-day moving average. And even if you have a very basic understanding of charts, I'm sure you've heard of both those moving averages, and you know that when the price is still up above them, you want to see them act as support. So there's definitely, like I said, none of this is a guarantee that some sort of massive bounce is going to occur. But my point is, it's at least a logical thought to have. It's at least rational to think that maybe there could be some sort of bottom that takes shape next week, and then you get a bounce. So I'm not saying that, on Monday the price is snapping back up there, but it wouldn't be shocking to see the price potentially go sideways and then start to work its way back upwards, especially at these moving averages, slightly increase a little bit more and more. So some interesting dynamics there. Now, on the flip side of things, as far as the overall health of, and kind of the overall story of the price going forward, if next week the price maybe just goes sideways a little bit and then crashes down through both those moving averages, at that point in time, it's essentially putting the chart at a pump and dump in the sense of price made a great move up, and then all of a sudden the price goes right back to where it started. That would be the epitome of a pump and dump. So keep that in mind. Now, again, I'm not saying that's what's going to occur, but just something to watch, because these levels are very important, because the last thing you'd want to see, assuming you're bullish, of course, is for the price to go right back to where it was. And that's what that would be representing. Any sort of breaks down below those moving averages where the price continues on down, that would put the price, like I said, quite literally right back to where it started, down around those lows right there. But as of now, got the doji candle, which is a good candle to see. The doji is happening right up above those moving averages, so we'll see if the price can get some sort of consolidation and bounce up next week or not. But we'll see what happens with it. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.